Many people create a budget with the intention of managing their finances, yet find that their spending plan doesn't align with their actual financial activity by the end of the month. This common discrepancy between a planned budget and realized spending can be attributed to several underlying behavioral and structural factors. A budget is essentially a forecast of income and expenses over a specific period. However, its effectiveness is often challenged by events and habits that were not accounted for during its creation. One of the primary reasons a budget may fail is the omission of irregular or non-monthly expenses. Individuals tend to focus on recurring bills like rent, utilities, and loan payments, which are predictable and consistent. They often overlook expenses that occur quarterly, semi-annually, or annually. Examples include insurance premiums, vehicle registration, property taxes, or annual subscription renewals. When these larger, infrequent costs become due, they are not part of the monthly cash flow plan, creating a sudden financial strain that can derail the entire budget for that period. The budget appears to be working on a typical month, but the structure is not robust enough to absorb these periodic shocks. Another significant factor is the underestimation of variable spending categories. Costs for groceries, transportation, dining out, and personal care are seldom fixed. While a budget might allocate a specific number to these categories, daily fluctuations in prices and personal needs can cause spending to exceed the planned amount. For instance, an unexpected increase in fuel prices or a week with more social engagements can lead to higher than anticipated expenditures. This phenomenon is often compounded by what is known as lifestyle inflation, where increases in income are matched by corresponding increases in discretionary spending, leaving the net savings rate unchanged and the budget perpetually strained. The concept of psychological friction also plays a role. A budget that is too restrictive can create a sense of deprivation. When individuals feel their spending is overly controlled, they may be more susceptible to impulse purchases or rebel spending as a way to compensate. This is similar to a strict diet that leads to binge eating. The psychological toll of constant denial can make adherence to the budget feel unsustainable, leading to periods of overspending that negate previous efforts at frugality. The emotional component of spending is a powerful force that a purely numerical budget often fails to address. Furthermore, a lack of a specific category for miscellaneous or unexpected costs is a common structural flaw in many budgets. Life is inherently unpredictable. A minor home repair, a last-minute gift for a colleague, or an unplanned trip to the doctor all represent small, unforeseen expenses. Individually, these costs may seem insignificant, but they can accumulate over the course of a month and create a noticeable deficit. Without a dedicated miscellaneous or contingency fund built into the budget, these small financial leaks can sink the entire plan. People often assume their miscellaneous spending is negligible, but tracking reveals it is often a substantial category. The way a budget is tracked, or the lack thereof, is another critical point of failure. Creating a budget is only the first step. Monitoring spending against that budget is what makes it a functional tool. Many individuals create a budget at the beginning of the month but fail to track their expenses in reality. By the time they review their spending, they have already overshot their targets, and it is too late to make adjustments. Manual tracking with pen and paper, or even spreadsheets, requires consistent discipline, without a regular, even daily, habit of recording transactions. The budget becomes a static document rather than a dynamic guide for financial decisions. Behavioral economics offers further insights through concepts like mental accounting. People mentally compartmentalize their money into different accounts, such as rent money, fun money, or savings. However, money is fungible, meaning a dollar is a dollar, regardless of its intended use. An individual might be reluctant to pull from their savings compartment for a daily expense, but will have no issue overspending from their entertainment compartment. This can lead to imbalances where certain budget categories are consistently overspent, while others are protected. Yet the overall financial position still deteriorates because the total outflow exceeds the total inflow. The planning fallacy, a cognitive bias where people underestimate the time and cost needed to complete a future task, also contributes to budget failure. When setting a budget for a project like a home renovation or a vacation, individuals often create an overly optimistic financial plan. They may not adequately research all potential costs or build in a sufficient buffer for delays and unforeseen problems. As the project unfolds, these unbudgeted expenses emerge, forcing a reallocation of funds from other areas of the personal budget or leading to the accumulation of debt. The initial budget was based on an ideal scenario rather than a realistic one. Finally, a budget may not align with an individual's personal values or long-term goals. If a budget is seen merely as a tool for restriction, it lacks a positive motivation for adherence. A more effective approach connects the act of budgeting to the achievement of meaningful life goals, such as saving for a down payment on a house, funding a child's education, or planning for retirement. When the daily choices to spend or save are framed within the context of these larger aspirations, the motivation to stick to the plan increases. A budget that is disconnected from personal values is just a set of rules, and rules are often broken. The discrepancy between a budget on paper and financial reality is a complex issue. It involves the technical construction of the budget, the psychological relationship with money, and the behavioral habits that govern daily spending decisions. The outcomes of any budgeting approach will vary widely depending on an individual's circumstances and consistency.